At least, from my perspective, the year 2022 will be unlike any other. As a real estate investor or prospective investor, I'm going to go through all of the things you should not do because if you do, you're going to be in serious trouble. So, with that, let's get going on real estate investing 2022. Hello everyone, welcome to Finance Wisdom. In this video, we're going to talk about things you must know before real estate investing 2022. If you're new to this channel, do like and subscribe to the channel. The real estate market has had many chaotic years throughout the years, and I would argue that each one is distinct and has its own set of difficulties. Inflation is at an all-time high right now, and interest rates are rising and rising very rapidly. A record high has also been reached in the real estate market, which has seen many years of absolutely wild growth. You should feel a bit uneasy about that, as 3 to 5% is the average and we've seen about 15 to 20 in several markets. Additionally, there are a lot of weird things happening globally and even here in the United States, which has made this year very bizarre. Let's get started if you're considering investing all of your carefully earned savings in real estate. First, avoid purchasing real estate at the same cap rate that you would have done 4, 5, or 6 months earlier. Here's why buying at below average cap rates is possible while interest rates are at historically low levels. Yet, if you're using leverage, a cap rate that was once advantageous is no longer advantageous when interest rates starts to rise. Even if the market is currently rising and has been for the last year, you must nevertheless take into action the fact that interest rates are rising so sharply. Unfortunately, a lot of people are considering a property's cap rate. While you may have been able to purchase an 8 cap home a year ago due to the low interest rates, this is no longer an option. Therefore, if you're considering real estate investing 2022, be careful to check the cash-on-cash return and ensure that the figure is where it needs to be before making a commitment to a property. Second, don't count on rapid appreciation. During the previous 5 years, the fact that we've got utterly ridiculous appreciation year after year after year for as long as we have is true despite the belief that many individuals are fortunate in this market. It's rather bizarre. It is absurd how large it has become, a 15% to 20% appreciation. Even with the manner that interest rates are rising, it is absurd and it cannot go on. We can't rely on the market to keep rising at these unsustainable rates to cover poor investments. The previous couple of years have been wild. So many of the folks I've encountered have really pushed their numbers. These were the properties I should have purchased last year, but I didn't since the numbers didn't seem fantastic, even if they do now. That is no longer a valid way to purchase real estate. You may do so if you intend to ignore it for 30 years. However, I assure you that I will care in 30 years. However, you cannot buy with that as your main reason for purchasing, and there have been many people over the last couple of years who have justified mediocre purchases. So let's hope, as long as things continue as they have, you will always be saved by the fact that eventually, those properties will increase in value. They've been saved by irrational inflation and irrational appreciation. And I'm telling you right now that buying them right now is not a wise decision. The only thing that can save you from a terrible bargain is to bet on inflation. Third, don't over-leverage. I can assure you that if you overextend yourself, you'll regret it in a few years. This means that you shouldn't spend a lot of your money, take on a lot of debt, use a lot of leverage, or fail to maintain enough reserves. At this stage in my life, I'm doing this and advising people to keep at least a year's worth of reserves set up for all their personal and business needs, including any costs associated with loans on properties. You are quite well protected from leverage in this manner. That implies you're going to buy real estate without enough reserves, which puts you in serious difficulty if things go wrong. Making sure the leverage you do take on is not subpar debt is another thing you need to watch out for while avoiding overextending yourself. To get a 30-year fix, or at the absolute least, a 10-year fix on your debts, you must take all reasonable steps. You can hedge your bets by taking out some of those short-term loans unless you already own a lot of real estate. But even in that case, I would advise against taking out any kind of ARM loan because, in my prediction or guess, interest rates will still be higher even 5 years from now than they are now. or higher than they were 2 or 3 years ago. Even if rates do go down, you can always refinance, but depending on how the market reacts today. If they rise and remain up, forcing you to accept a higher interest rate in 5 years, that might be quite troublesome. Fourth, paying off properties. The following is the one I want to highlight because, despite what your instincts will tell you, you shouldn't do it. I'll give you an example. I've had a terrific year, but this market's making me uneasy, so I believe I'm going to pay off a few of my properties. Says a guy who owns real estate worth $20 million. In my opinion, this is the worst thing you could do, and here's why. He's someone who has been buying properties at 3 to 4% interest rates, possibly even lower on some of those deals if you really crushed it. So paying down that debt means if interest rates continue to go up, your money is just sitting in the bank or putting it into, very liquid places where it's locked up for 3 to 6 months and very well protected. You can get close to that in interest on your money and have it way more liquid and not be tied down to a mortgage. If you currently own properties with excellent debt, long-term debt, and low interest rates, do not pay them off since you will have to refinance at much higher interest rates if you need the money. As a result, please keep that money in cash so that you may capitalize on possibilities today and in the near future. You won't have to remove it from a home with bad debt this way. Alternatively, locate a location where you may earn a little safe return, whether you haggle with your bank or discover another source. I just negotiated exceptionally beneficial interest rates with my bank, and if interest rates increase now for specific items, I've arranged the bank will compensate me. I have to keep the money secured for a minimum of 3 and a maximum of 6 months, as long as it's a very secure investment with the bank and I'm profiting from receiving some money back in interest. I'm comfortable with having a part of my money locked away. In an effort to reduce interest costs, I'm paying down part of my real estate. I'm telling you, paying off a property and eliminating a payment won't be as beneficial to you as having that money in the bank to take advantage of opportunities or to use to be able to pay those payments in the future. If things go south and you need those reserves because something weird happens with rents coming in or anything else that could potentially happen in the future, so please make sure you've got a good reserve pile and don't do something foolish like pay off a property. If you like this video, don't forget to like and subscribe to the channel. Let's continue to tackle real estate investing 2022. Fifth, while buying a house or an investment property, avoid making emotional judgments. I'm telling you, right now is one of the worst periods in investing history to make a bad investment. If you're sitting on big stacks and aren't concerned since you have reserves on reserves, then go ahead and overpay on a property. What difference does it make? However, it does not make sense to YOLO on a bad investment property right now. If you're going to purchase an investment property, make sure it's a fair bargain with reasonable rates and don't get carried away. Sixth, don't trust anybody at this time, including realtors and loan officials, since they can be preying on your anxiety and pressuring you to make a purchase to line their own wallets. You want to be certain that you are making an informed choice and that you are familiar with the market. They are driven to influence your choice to spend money because they have a financial stake in it. Be careful not to rely on statements such as, "This property will be worth this much in the future, you should buy it," or "Hey, do a 5-year term, it's perfectly worth it," as you'll be able to acquire a cheaper rate right now and do your calculations to be able to buy the property. Don't give in to someone who is trying to convince you to make a ridiculous purchase so they can line their pockets. You can refinance later since you don't know how long you'll have to wait to refinance for those numbers make sense. We'll get right to my last point, which is perhaps the most crucial one. There are still amazing offers available today that may even be better than they were 6 months or a year ago. The reason I say that is because there are many extremes, which leads to a great deal of anxiety, which leads to a great number of individuals who are eager to sell. As people approach retirement, they're contemplating, wow, the market has reached its peak. To take advantage of extracting that equity from the home and put myself in a favorable position, since I intended to sell, I would sell at a discount. They're prepared to sell now that we have seen such an incredible appreciation. You're prepared to purchase and often you might benefit from an exceptional offer. That's good news for the two of you. Because of this, I am now pushing everyone extremely hard to take advantage of off-market bargains. I haven't seen a decline in the market for multifamily properties or even single-family houses just yet. Even with these rising interest rates, I've seen that they have remained mostly constant. I'm aware that many individuals now worry that while using the MLS, when you send out a mailer and you get an off-market bargain from someone who is driven to sell because they want to cash out and they hear interest rates are rising but may not be paying attention to the market, you can sort of profit from that concern. A huge win-win situation for the two of you may be found if they are not using a realtor. Even if there are many things you should avoid, the one thing you should always do is buy Real Estate Investing 2022 at a great price, since it is what will be best for you and your family in the long run. We've reached the end of another video, and thank you for watching. I hope you have learned something in this video. If you like this video, do give us a like, subscribe to the channel, and comment down below. Thank you and goodbye!